All right, we are officially live for Palantir Weekly. Now, at Chris Patil 99 does not look like an Indian 38-year-old guy because it's not. It is. It looks like a white baseball coach right now with that cat. That's what you look like. Where you coach Little League. But you're worth more than a lot of MLB teams. So, having said that, we got Steve with us, ladies and gentlemen. Oh, okay, Steve. Okay, so let me explain a little bit. All right. So Chris told me he would not be on the podcast today. Okay. He said, hey, dude, I got to cancel tonight's thing, dealing with a family thing at 10, 11. I called Steve immediately. I'm like, Steve, everyone canceled on me. I need you to be here. Steve, through the look of it, does not really want to be here. Okay. We also got Matt. Matt is here. And now we are live, right? So, Matt, I was just saying that Chris canceled on us. And so it was only going to be me and you. So I needed someone else. So I called Steve. And I was like, Steve, I need you. I need somebody.
We need you.
Steve has had 15 burgers, 17 cookies, 3 pizzas tonight, a hooker, some cocaine. And so he's relaxing. And he really did not want to get on the stream tonight. But it's been
he's really celebrating the S&P 500 eligibility.
Yeah, so he just said he wouldn't come on. But I called him. I was like, Steve, I need you. Steve, whatever you do, you cannot exit the stream right now because Christopher just texted me and he says, never mind, I'm going to be on. So,
are you kidding me?
So the whole reason I needed you desperately was because Chris was gone. But now Chris says he'll be on.
Now we're drinking in style tonight, boys, because we got. Well, I'm not actually drinking this. It was for a different reason.
But now, granted, Steve, I wanted you to be on even if Chris was going to be on, right? I texted you to be on.
Yeah, but it's 11. I was relaxing. I was half asleep.
Did you have any cigars?
I started watching Sopranos again.
Oh, don't tempt me like that. What season are you on? Sorry,
I'm on episode 12, season 3. Amit just heard the gunshots in the background from when they tried robbing the card game.
Oh, that's a good. That's
yeah.
You're still early. That's still early. It's still early.
Very underrated.
Amit, we got to get you to watch it, my guy. If
is
you have
is the Sopranos like a cartoon?
If you have 156 hours of time,
you did not just say that.
I know what it is.
That's what I live my life by. You can immediately watch it and you'd be like, you know what? Now I understand Matt a little bit more.
I will say this. HBO could be the greatest network for original content for TV shows.
That's fair.
Could be. They make very quality stuff.
So I classify television into 3 categories, right? Something that
I'm interested. Let's hear this.
So something that I'm like, I had to put all devices away. I'm not on a computer. I'm not sharing my time. That's HBO majority of the time. That's things like Westworld season 1, Game of Thrones. Sopranos.
I love how you said season 1 because season 3 was really bad. And
I never watched season 3. I watched season 2 and I was just like trying to get it.
Yep.
I was so confused.
Yep.
So things like Jack Ryan on Amazon. Yeah, so you have some really good high quality TV shows. Then you have stuff like.
Matt, let me ask you this because you said Jack Ryan. Did you watch Night Agent and did you watch The Recruit?
No. Should I?
Wow. You need to watch both of them.
Are they on Amazon Prime?
They're on Netflix.
Okay, cool.
If you like Jack Ryan, you will love both those shows. They just came out not too long ago. They're both 1 season, but they're making season 2.
And you said they're both
Sons of Anarchy.
Can you repeat them again?
Dude, Sons of Anarchy.
Anarchy's a good time.
6 shows of all time, maybe?
Yeah, it's up there with Sopranos.
It's up there. I mean, so this is what I do with Sopranos now. I refuse to watch the Dr. Melfi scenes, and I refuse to watch any of the scenes with Carmela or the kids. I only watch the scenes with the boys.
Because you're afraid that it taints it.
I've seen it so many times. I just want to watch the stuff I want to watch on. I can fast forward through all the other stuff. I
feel that.
Yeah, you can crush a season in like 2 hours.
Okay.
It's great.
I'll need to try it. The thing that I liked about the Dr. Melfi scenes, the Carmela scenes, not Carmelo, Carmela, it balances out a little bit. You can kind of see the dichotomy that he has to go through and living a normal life and trying to. But if you,
but you've already seen all of them, so you already know what happened.
Yeah, I've seen them all 4 or 5 times. Yeah. So
and I would
HBO's
suggest
really good.
I would suggest you guys watch Beef on Netflix. It came out a couple weeks ago. Ali Wong. Did you see it, Matt?
No, it keeps showing up though, and it looks good.
Yeah,
I like Ali Wong.
I don't click on Netflix originals ever, but in the description of the show, it said "Life of an Unfulfilled Entrepreneur," and that fucking phrase "entrepreneur" got me. And then I just clicked it when I was having my root canal. I needed something, and I got hooked. I was like, wow.
Netflix makes good content. They do.
Netflix has
but
been
so let me get to the other versions of content. The majority of content on Netflix, I will say, is not like I rank how some of these HBO. Like I had most of the time, my Netflix stuff is, I'll watch for about 4 or 5 minutes, and I'll go back to my phone for a minute or two, do something, then I'll get back on 4 or 5. That's the majority of it, right? So that's like most of the time, it's like your sitcoms and stuff like that you kind of like. You don't have to intently watch to get all the customer or not customer, the character kind of like
development and all that stuff.
Yeah, development, all that crap. And then there's this like I'm always on my phone. It's literally this background. Like,
okay, I do agree with Jake though. I think we all can agree this is the greatest show of all time.
No, stop. Breaking Bad is the most overrated show. Stop.
What?
Horrible.
You can leave the podcast now. We got Chris. We don't need you anymore.
Thank you.
No. Don't leave.
He did it on purpose.
No, I'm serious.
No. What is okay? Why is it overrated? Why? What is the reason? Why?
I couldn't get past the 4th episode. It was so bad.
So you have
the character development in season 1 is
so
tough.
Bad.
It's tough.
It's not tough. It's a little slow, but it's not tough.
Like it's really slow.
Game of
Thrones. It's really slow.
Tough. Okay, I couldn't get past the first episode on Game of Thrones.
The only reason why Game of Thrones is so tough is because there's so many characters.
No, because it's
and I will give you that. For as good as Game of Thrones is, it is really slow and drawn out.
It is.
And wasn't the last episode like the worst ending of all time for a series or something? Like,
how else would you have ended it?
I don't know the plot. I don't know the plot. All I know is
because I agree with you. When I first watched it, sorry, this has become like a media podcast.
We'll get into Palantir in 2 minutes. We'll get into Palantir.
Yeah, but I agreed initially, and then I started reading some theories online. It's like, well, how else would you done it? And I'm like, they got a point. Like,
well, look, the wildlings aren't going to let Jon Snow freaking get his head chopped off. I can tell you that much.
Dude.
All right, Steve, last thing I'll say is you got to watch Breaking Bad, man. You got to actually watch it, Steve.
Steve, what were the 2 shows that you told me I needed to watch? Night Grinder?
Night Agent and The Recruit.
And The Recruit. Got it.
Excellent. Absolutely excellent.
I'm going to write those down.
All right, time to start Palantir Weekly. Chris, me, and Matt are here. I needed a 4th. Hit up Steve. I had to basically beg him to come to the podcast, and he finally is on. So, Steve, we're going to appreciate your thoughts. Biggest news of the week. Let's get into it. Palantir is now eligible, theoretically, to be included in the S&P 500 index fund if they can maintain GAAP profitability for the next 4 quarters, because some committee said that founder-led companies with majority F-class shares are now eligible, which they didn't used to be before.
Just to put one thing into perspective, this used to be allowed, by the way. That's how Google was allowed to get into the indexes as well back in the day. And then they made a rule after the fact. So before, same thing with Meta. Meta was also founder led. So you had a situation where Zuckerberg still has majority ownership over the company's decision making, not the company itself in terms of shares, but the decision making.
Why do you think that they changed that, Chris? I mean, because Google, I thought, was always a really well-run organization, and that's interesting that they would make that a rule. I mean, I thought that the other rules that they have, the profitability, all that.
The main reason why is because you're basically going against shareholder value, right? So basically, because you're a shareholder, you get to have a percent of say in how the company is run. So traditionally, your shareholders are the ones that are supposed to be making decisions. Now, the way they make decisions is not they vote on specific issues, but they vote on the board of directors and different elections so that those people representing them can make those decisions. So it's kind of like how the government works, right? Where you get a vote based on, I mean, technically you get a vote because you have one vote, but in shareholder terms, the more ownership you have, the more say you get to have in the company's operating. So with F-class shares, that whole thing goes out the window, because right now, if you look at Palantir, Peter Thiel, Alex Karp, and Stephen Cohen ultimately can make any decision they want, regardless of how shareholders vote. So right now, if let's say they only own 2% of the company and 98% of the company said, look, we want to remove Alex Karp as the CEO, you couldn't do it because those supermajority shares would just outclass the rest of the body. So that's one of those things that's like, is that really a fair thing for shareholders? Do shareholders, it's not so important for like retail shareholders, I suppose, because we're such at the bottom level and we don't really get to make decisions on companies. But when it comes to like activists, like people that get on board and they want to make sure that the company is doing fairly well, they can rearrange things. So here's an example of something that was positive. And this one that Cheniere Energy. Cheniere was originally founded by Sharif Suki, who was an executive. He built up LNG Cheniere, to a degree, but he was also taking on a lot of what's that thing called? He was getting paid a lot, and he wasn't really running the company very efficiently. Now Carl Icahn comes in, bought up a lot of shares, and launched an activist campaign against him, and got him booted off as CEO, and put, I think, Jack Fusco on, who literally took it to like another level. So it can have positive effects, because after that, Cheniere really did well, but it can also have detrimental of things too. Like here's an example of like Steve Jobs, right? Steve Jobs got voted out of Apple, right?
For a Pepsi director, right?
Well, he used to be, from Pepsi, but I mean, this is the thing.
What do you think about this news? Do you think this is good for Palantir? This potential, like, obviously, if we can maintain GAAP profitability, this is great, right?
Well, I mean, it's gonna force Palantir to stay GAAP profitable.
So isn't this a really good thing?
I would say in the short term, it's definitely a good thing, because they've already got one quarter under the belt, and they probably want more quarters of GAAP profitability under their belt. So maybe they'll go a little bit lighter on OpEx. They'll cut back on some of their spending to keep GAAP profitability higher. If they had some initiatives around growing their business, they might slow it down a little bit, just to make sure that this is something that they can utilize to get listed and then include it in all the indexes. So, and for shareholders, it's definitely a positive sign. I don't know.
Steve, what are your thoughts? Let me get Steve, then you, Matt. I need Steve to make sure he's awake this whole time. Go ahead, Steve.
When I put on mute, it means I got The Sopranos on.
You're such a bitch.
But Chris is right. You look at what the Godfather of LNG did, but I don't know. We got to see a string of quarters with profitable GAAP net income. It'll be good if they're included. Like, there's nothing negative about it, because it's going to force index funds and managers to purchase shares, drive volume up, but who knows what the impact will be. I mean, I didn't really study from when Tesla got included to not. What effect did it have on Tesla?
Tesla went up 40% when it got included.
When it got included, over how long?
Over the course of like 2 months, something like that.
Yeah, it was a lot really quickly.
You wouldn't know, Stephen, because you didn't go
thing. I don't know. I'll be excited when they actually get added, because who knows what they're going to do this quarter. I mean, Karp kind of fraudulently slipped during the interview in CNBC. So,
but here's my thing, like, why would they issue this letter if they weren't GAAP profitable? I cannot logically. It would be the biggest FU to shareholders to make a shareholder letter that we are now legible, and then not follow up on the biggest requirement. Like, why wouldn't you just not put out that letter, right? So I think we're going to be GAAP profitable this quarter.
No, I think they're going to do everything in their power to live up to that. But like I said, the business conditions may not support that kind of move. It's, there's things that the CEOs are going to say to get you on board, to, give you that like, oh my God, I'm investing in a really good company. But, if the macroeconomic conditions don't match or line up, then no matter how good of a CEO you are, you're not going to be able to do it. So as an example, look at Tesla. you know, they projected a 20% gross margin, but who could have guessed that, you know, all the stuff that happened with price of lithium going sky high and all this other shit that was going on at the same time, that would have negatively impacted them. You know, CEOs are going to give you sunshine and rainbows because they're not going to like come out and say, guys, I'm sorry, even though we're eligible to be listed on S&P 500 because of rule changes, you know, we still have a tough quarter to go and we may not make it, blah, blah. No one likes that. No one does that as CEO. Everyone's going to, you know, project out sunshine and rainbows. That's just what a CEO does. They want to maintain their stock price, if not try to boost it a little higher, you know. So think logically from, yeah.
What was that?
I said your thoughts on the S&P stuff?
So I guess I'm going to look at it and provide two perspectives, right? If you're somebody that really just wants to get your cost basis back, because a lot of people are underwater, you know, this is a great thing. And I think that they should look forward to it if they think that within the next 2 years, Palantir is going to be including the S&P 500. They could 2x their money, 3x their money. I'm not looking for a 2 or 3x, right? I mean, I've formulated this part of my portfolio sufficiently enough where, look, it'll sting if it goes to 0. I don't think it will, but in 10 years time, I want it to be something that's 10x, right? Something that's truly meaningful and a good position within the portfolio. So to me, having an S&P 500 entry in 2024 versus 2025 doesn't matter to me, because in 10 years, I'm thinking we're going to be in the same place. The thing that bothers me and kind of irked me a little bit, because Chris is more of like a trader to an extent, right? You have to think of where his mind's at compared to where my mind is at. Chris, no offense to you, Chris, because you're right in your own realm, right? Like, this is how you structure your portfolio. It's personal finance, right? But my thing is with it is, I would rather them not take a shortcut on trimming back OPEX. I would rather them take their time, do what they think is right. They have the cash on hand to do it. They can have that opportunity to not necessarily force profitability if they think going after this client is a better opportunity than going after that client, or building this piece of software versus that piece of software. All that stuff, reinvestment back in the organization and creating these programs is OPEX, right? That's things that you have to spend money on, and more employees that you have to spend money on to free up other employees' time to be able to figure out, okay, we need this department and the headcount associated with that to be able to go on with whatever is going to be the next big thing, you know, that comes after Apollo or comes after AIP. And that all takes money and time. I don't think that they should shortchange and be like, well, we really need to trim back on the OPEX a little bit to get into the S&P 500. When I'm looking 10 years down the road, and they've been looking at this for over the past 20 years, and cut corners like 1 or 2 years ahead of time just because they want to get, you know, a little bit of money from BlackRock and Vanguard. And going back a little bit to the piece about institutional ownership, that bothers me a little bit as well. I think in times like this, where a company is still trying to get to where their optimal progression is, you need the founders to be able to maintain control because they have a vision, right? It's one thing if they're sinking the ship, right? Palantir is not a sinking ship. And same thing with Apple back in the late 80s when they gave up Steve Jobs. It was maybe going through some dire straits, but it wasn't a sinking ship. Maybe I'm biased because, you know, I know where Apple is today, and maybe it really was in a really dire time that I don't have that, you know, insight into. And obviously maybe they made a better choice, and Steve came back with a vengeance and obviously took it to where he did until he resigned in 2008 or retired, whatever you want to call it. Because he didn't resign, I guess, rather he stepped back. He gracefully left because of everything with his health and everything the like. But you need the founders to an extent to take those things. And sometimes with these activists is they're more looking at it like Chris is, right? And not saying that Chris is wrong, but they're looking for, we need to get profitable as soon as possible so the share price can pop and we can get our 30% for the year and get the fuck out. It's like, that's not what I care about, right? So it's all about different strokes for different folks, right? So some people are going to think that I'm an idiot by talking the way I'm talking about how I'm not extremely excited about the S&P 500. I am excited about it. I knew it was inevitable. I honestly think that, well, I shouldn't say I know it was inevitable. I had a high likelihood thought that it was going to be extremely likely with where I thought Palantir was going and what I got myself involved in 2017, 2018. But what I hope it doesn't do is go down the same rabbit hole all other public companies go down, which is do everything for the sake of the shareholders. A lot of times the shareholders, you have to try to appease the people that are looking quarter to quarter, people are looking 10 years down the road. You can't appease everybody. And so my hope is like, they do what they've been doing for the past 20 years and building this great company, and don't just try to shift up and shift the company culture towards, we have to make the quarterly numbers. It's like, that's not who Palantir is. Palantir is, hey, we make great software for the modern enterprise, so we have a vision as to what we can be. And that is what it is. You don't think Satya Nadella sits around and says, we need to make our quarterly numbers. No, Satya Nadella is like, no, this is where we need to head the company towards. We need to make a great enterprise suite of customers and get 365 off the ground and stuff like that. It's like, they don't really, I hope they're not worrying about the quarter to quarter. Jeff Bezos didn't worry about the quarter to quarter. So why, I hope that Palantir doesn't do the same. I hope they do the same and make sure that they don't go that quarter to quarter route and they still think about 5-10 years down the road with every decision that they make.
So I agree with what Matt said, but I would classify Chris as opportunistic, not necessarily a trader, because he's, I would say, definitely more active than how I invest. I mean, look, the money that I put into Palantir, and it is not a couple of hundred shares. I could care less about it. I don't need it.
It is a couple 100,000 shares.
I didn't say that, I wish. But, you know, like, it's just one of those things. I see Palantir as a very strong candidate for capital appreciation down the road. So I'm willing to lock up capital now that I'm not using. I can't pick when it's going to go up or when it's going to go down. If it goes down, I'll buy more if I think it's worth it. You know, I don't sit there and move in and out of companies. It's just not how I do things. I don't have the time to do it.
Yeah,
but,
and I align with you a lot, right? And I'm not,
yeah,
when I say those things, I'm not trying to badger Chris. He's
no, I know.
phenomenal at it, you know. Like,
listen, I wish I was
I
more
do, me too.
opportunistic and tactical because I probably make more money.
I mean,
you watch too much Sopranos. You don't actually do research.
He's a good-looking brown man, 1 and 2. He knows how to make money in the fucking
But
market.
The one thing I was thinking about was with the S&P, it'll probably change the narrative around Palantir, and that's what we need. We need the narrative to change.
I think more than that, you need stability. The thing is, you need to have a huge institutional base to give that stock some stability so that you don't have these wild swings of going down 20% and up 20% within a couple of quarters, right? If you think about where Palantir is right now, this is the perfect stock. If you want to try to swing trade, believe it or not, this is the perfect stock because you have a huge retail investor base that's willing to sometimes overpay and then sometimes really sell things off, right? And by the way, just to tell you guys, I am not as much of a swing like a what is that thing called? Like a trader as you guys think. I have a portfolio that's literally like just buy and forget. I have one that I'm more like medium term, and I have one that's very short term in nature, where it's like, okay, yeah, I see some opportunities in the short term that I don't want to miss out on. So when I take a look at companies, when I'm investing in them, I ask myself, is my capital worth more in this company that I'm going to hold for the next 10 years, right? Or am I going to buy it? Am I going to sell out of a position because for some reason in the short term, it's gotten way too frothy? You know, the examples that I would give is Palantir. When I bought Palantir, the entire market was overvalued. So it's not like, oh yeah, I was just buying one overvalued company. No, I knew the risk that I was taking when I was buying Palantir, but I decided at the time the opportunity to miss out on Palantir might have been too big. But the strategy that I used was just dollar cost averaging into small amounts over a long period of time. So right now, I think if you are an owner of Palantir, I think the person that's probably performed the best in the last probably 6 to 9 months has been Sachin. Sachin's been doing nothing but just selling covered calls. So if you think about it, you typically got a good amount of premium on those covered calls, and he's got a large position of shares. So all he's doing is just selling covered calls and making his monthly bank. And I don't know what he's doing with the cash. He's probably reinvesting it to lower down his cost basis. But right now, Palantir needs stability. This S&P 500 thing might give them a little bit more stability on it. And I do want to address something that I think Jay Kim or whoever said it regarding my Tesla comparison with Palantir. The reason why I'm comparing it is regardless if you're on the consumer side or if you're on the commercial business side of providing services or products, if you have a macroeconomic headwind like a recession come, both types of businesses are going to suffer. Maybe one suffers more than the other, but if business slows down, guess what? It affects both sides. So I would say just be on the be on the lookout for deals opportunistically right now during the recession that could 4x, 5x in the short and medium term. Because if you want to lock up your capital in Palantir, hoping for a 10x in 10 years, that's by you. Go right ahead. I have some companies that actually are like that for me, right? Where I'm just like, look, I'm not going to look at this company in 10 years. I'm going to look back. Like my position in Accelera, I don't look at it. I really don't. I think this company is going to 20x by the time I'm through with it. And I just hold that on the side. I don't talk about it. I don't research anything really. I don't look at the company day to day. I think it's fundamentally undervalued right now, but it's still somewhat speculative because their products are not there yet. But I think that their platform is great, so they're gonna get there. But that's the type of investing that I have like on the side. Now, on the other hand, we like what's his name was telling us right now like SLG, that company right there was a great short-term.
Oh yeah, people need to know. Steve recommended that. It's Steve's pick.
Steven actually messaged me and Amit, and he's like, hey, look into SLG, blah, blah. So I said, okay. At first, everyone on CNBC was talking about, commercial real estate market is dead. Get the hell out of it. This is a problem. Like they have this debt. So then I saw some of my friends on Twitter. They were posting like, oh, I'm going to short SLG. So I was like, oh, let me take a look at it. And I looked at it from the mindset of a short investor. I said, okay, let me see. Is this something worth buying some puts on because this could crash? As I went through the balance sheet, as I went through the 10K, I'm just like, wait a second. This is not a short opportunity. This is actually a long opportunity. Everyone is selling off, but they're not even thinking of some of the other opportunities that this company has. So as an example, someone was saying, oh, well, look, the SLG has all this debt. What are they going to do with it? I'm like, yeah, but it's non-recourse debt, and all the debt that they have for the most part is either fixed or the floating part is all hedged with swaps. So there's no risk of bankruptcy for these guys. They're still generating positive cash flow. And when you run the numbers down and you just think logically, you're like, wait a second, how is this even possible that this company is trading at 1 billion market cap when net assets it's worth close to 4 to 5 billion under a terrible scenario? So that's when I was just like, oh man, the market is not realizing the opportunity here. So this is where I need to be a little bit more aggressive and buy a large position, and I've done fairly well on it.
Yeah, I mean, you would have done the same in a pandemic, right? When everyone was selling mall real estate investment trusts, like Simon Property Group and stuff like that.
I was buying Simon Property. I mean, that's been a horse.
I was buying Stag. I was buying Realty Income.
I am an investor in all of them.
Yeah, Stag's probably
Stag is the best, my opinion, industrial REIT there is. E-commerce, people don't. I mean, if you've seen some of my articles about Simon Property, I may have put in some Amazon articles too, but e-commerce is only 22% of total retail in the U.S. right now, and I don't believe it's expected to get past 25% until 2025 or 2026, and that's with the total retail sector going up.
Yeah,
I mean, it's crazy.
A large runway. Yeah, large runway.
I was buying up a whole bunch of BDCs. The main one that I bought up was OCSL.
Did you say you were buying up a whole bunch of BBCs?
BDCs, Business Development Corporation.
Get your head out of the gutter a bit.
I know. So
Chris, you and I have a difference of opinion in BDCs. I'm Ares Capital, Owl Rock, and Fisker now. Not Fisker, I'm sorry. FSK. And then I do own Main Street Capital, even though I think it's a little bit overvalued right now based on their net assets. But, I mean, thing does well.
Yeah.
I forget when I sold Main Street. I think I sold it when it started getting into the 40s again. I was buying more during the pandemic. I bought it because there's a monthly pair back when I was mostly dividend facing, and then they had the 2 special dividends a year, and then they transformed it to only be monthly dividends. But anyway, once it got to the 40s, I sold it because I didn't think there was much running room left.
I actually bought a ton of preferred equity at the time because I was like, oh, wait a second, they have more than adequate coverage on the preferred. So even if they cut their main dividends, like it's preferred, they're the last ones to get cut. So if the preferreds are selling at a deep discount, that's the place you want to be, right? So a lot of people don't even know that, oh, dividends can be cut, but preferred, they would just accumulate and then you would get paid out for them.
Did you look at SLG's preferred?
I know, I did. It was like trading at $16. It was great.
Yep.
And that's a 6.5% coupon. So it's almost a 12% return guaranteed without really doing much. But I honestly think the stock is probably better because there's better chance of capital appreciation when these fucking people wake up what the value of this what the assets are supposed to be.
You and I both work in Midtown.
Yeah.
We see what is going on in the city firsthand. It's not what the news is saying or what any of the other stuff is. It is getting busier. There's no question about that, in my opinion. And when you run the numbers, I mean, the new book value just came out today, and I think I texted you, it was like 64.75, if I have it correct. It's right around that area, and that's tangible book value, not even book value, tangible book value. It is so undervalued by every realistic metric. And the other thing people don't think about is the amount of income that they're going to generate from selling off the JV partnerships this year. Their goal is to pay back $2 billion in debt.
Yeah, 2.5 billion. And the capital appreciation on that comes back to you guys as a special dividend.
Yes.
Like it's crazy the amount of like I whatever.
And
I'm not
it's
going to
22% short interest. Like, who are these people?
I don't know, but whatever.
It's the people that play don't pass at the craps table. That's who it is.
No, it's a lot of retail. I'm telling you,
I
retail.
Like that, Steve.
A lot of retail investors got into the habit of thinking that they could short. Like, oh my God, I've become such a short now. They were looking at SIVB, FRC. I was actually one of the first people, if you guys remember on Twitter, to call out FRC. I got actually hit by a whole bunch of people on Twitter saying, why are you short? Why are you net short on FRC? And I had to like really explain to people what the issue was. But when they said, oh yeah, man, I'm going to short SLG because commercial real estate is dead, I was like, I told people don't do it. I said it's actually the opposite, but I'm not going to go too far into it because let's get back to Palantir, talking about Palantir. Someone also mentioned over there, oh, what about the bonds? The bonds get paid first. Yes, I buy distressed bonds here and there too, but the problem with buying bonds is that it's a very illiquid market. So you can get stuck on the wrong side of something if you buy into a bond and there's no market for people to buy it out. At least with preferred, there's at least somewhat better liquidity terms than there is with bonds. Bonds are highly, highly illiquid. So just keep that into perspective.
If I were to buy a bond, I would think of it more like a CD. Almost.
Exactly. So even when you're buying a security, you don't just buy security based on the return possible, but it's also the liquidity of the actual asset itself. Because if you aren't careful, what happens, you could buy something and to dig yourself out of that position, it might cost you a shit ton of money just to do that. So yeah, but I'm not going to keep going into it. In regards to Palantir, I think they're going to, like I said to you guys, they're going to grow, but it's going to be a slow, steady growth. We're not going to see this S-curve giant leap all of a sudden, unless like we go to war with China and, everyone's like, fuck it, whoever give Palantir a $5 billion contract to figure out how we're going to screw over the Chinese, which, believe it or not, I think it's actually happening in the background.
I mean, do you think so? This I think fits really well into a transition with what Shyam was talking about.
Go ahead, Matt. You got to set it up.
Do you think that? Sorry, I didn't mean to steal.
No, you got it. You got it.
Set up the stuff, but do you think that fits directly into what Shyam was talking about, where they could capture a couple $1 billion contract with, say, the DoD being the primary sort of defense contract for
the software prime?
Yeah, software for AI, for whatever you want, and when it comes to the U.S. and not only the U.S. but NATO, with that
those
having
congressmen were listening intently to Shyam, right? I mean, they were asking me real questions. They weren't just bullshitting him. It seemed like for those 20 minutes.
I'm pretty sure that's the one thing we can all agree on, whether you're a Democrat or a Republican. If you ask either side, what is the main threat, the existential threat to the United States? It's going to be large bloc countries that have a negative impression on the United States and our way of doing business. So that's the Chinese and the Russians. Whatever it takes to screw over the Chinese and Russians, that is what we're going to do. Whether you're a Democrat, you're Republican, or you're independent, that's the message everyone can get behind because that's politically neutral. We can argue about who gets to use which bathroom, and that's something that we fight over. The one thing we're not fighting over is fuck over China, because that's the goal,
Steve, any thoughts you have on what Shyam got to say in terms of increasing the DoD budget for defense for software by 5%? Do you think that's possible they would ever do that?
Our defense budget's $850 billion right now, or something like that. So,
Yeah.
sure, why not spend more money? I mean, the country's in debt, $31 trillion. Just spend more money. Go right
No,
ahead.
but this is good stuff to spend it on. This isn't like, dumb stuff.
I think the thing that'll be scary. Sorry, Steve.
If they can't find
Sorry.
5% for software and $850 billion, they got issues.
So I think the thing that's going to be scary, and this just doesn't go for DoD or defense spending or anything, that like is the massive amounts of efficiencies and loopholes that they will be able to uncover that will shrink. And I think that will probably have a lot of butt puckering within the organizations that are already set up and contracting with the U.S. government. Just like how Tyson Foods, you think Tyson Foods, like they're probably watching every single little nitty gritty detail and trying to find any loopholes that they can close up, where this contractor's taking 20%, this contractor's taking 30%. Let's, knock them out of the system and clean up that and make that more efficient. I guarantee that with the amount of money that the U.S. government alone is spending, they'll find hundreds of millions, if not billions of dollars of inefficiencies that are being spent every single year, and they'll more than pay for themselves when it comes to being able to use Palantir. And that doesn't go just across the DoD. That goes through the healthcare systems like we've talked about in the past. That goes through every single piece of the government that could be used and could use this potential software and, create massive amounts of efficiencies that'll, probably help us when it gets back to, let's get this country back to a damn surplus with the $4 trillion a year in taxes we actually collect, rather than being in a deficit like we've been for the past, I don't know, since I've been really paying attention since the early 2000s.
So here's two things I'm going to quickly address. One is in the comment section. Another, the U.S. is in a recruiting deficit crisis when it comes to the military personnel. Okay, like no one wants to join the military. It's just obvious right now, whether it's a lot of the ideologies that the military has professed right now doesn't align with the values of your traditional recruiting base.
Real quick, when you served, and thank you for your service, was there a robust amount of people signing up?
Yeah. When the economy tanks, dude, the military gets the most amount of recruits. It just happens because half of my class, my basic class, was people that were one out of work. They didn't have a job, right? 2, they had to support their families, right? 3, the military at the time was offering really great benefits and a lot of bonuses, so that was a viable option. So whenever the economy takes a tank, a lot of people, they go into the military route. So I think a lot of people think that the only reason why people join the military is just America, go gung-ho, that's it. But no, there's other things out there. So I joined during the surge in 2008. So I saw a lot of people that were joining. Believe it or not, there was this one guy, and I don't know, I'll tell you about, his name was Rawlings. Rawlings was probably like 36 or 37. And the military at the time was really, really, because we had huge deployments in Afghanistan and Iraq at the same time. They were really hurting for people. Now, in order for this guy to get in, they needed to do a special waiver for him. I think he was actually prior service Navy, but they made him do basic again. And I remember during PT, this guy could not do PT. He was out of it. So I remember the first time drill sergeant went up to him, was like, Rawlings, you might be the fucking first private to die of old age, while on active duty. So it was just fucking hilarious. So
you were 22 at the time, right? You had just graduated?
I was 22. I was a young guy, So I saw a lot of people that were joining the military out of pure desperation because the economy was so bad. So that's one thing. Right now we have a very strong economy, strong labor market. So the alternative to join the military versus get a good full-time job where you don't get deployed and you get your limbs blown off, it's there. The other problem is the military right now has traditionally recruited in the South, like if you think about where majority of the U.S. Army's recruits come from, I'm talking about the Army. I don't necessarily know too much about the Air Force and Navy recruiting, but traditionally, majority of the people in the Army have come from the Bible Belt and like the South. The minute that the military went super woke, a lot of people were turned off by that. The other thing is a lot of DEI initiatives where it was diversity, equity and inclusion was really forced down a lot of people's throats. And so people were just like, look, I don't want to be called a white supremacist. I joined the military and all of a sudden now I'm a fucking baby killer. Like there is a negative stigma to being a part of the military that sometimes people don't want to deal with, Like
that's true. Because as soon as you say there's a negative stigma, even in my generation, no one wanted to join the military. Like, yeah, there's no patriotism that I feel at all.
But regardless if you want
in my generation
military or not, they're all heroes. Anybody,
I agree, 100%, 100%.
I don't know. I guess I grew up in a different generation where it's not that never crossed my mind, at least.
No, people think if you defend the United States abroad, you are defending an evil Western regime that is inflicting pain upon brown countries. That's literally the way people think about the military today.
Yeah, and it's unfortunate because that's not the case, or at least in my view, that's not the case. Like most of the people that I served with, they did it for 3 reasons. Number 1, to support their families, right? Number 2 is to support their community and their stuff. So real patriotism that they actually care for the country. And last but not least, for the people around them who were already deployed with them. I can't tell you how many people that I served with that were they ended up being almost like brothers and sisters to me. That is the level of deep relationships that you bond. Like the minute you wake up, you see this person. The minute you go to sleep, you're sleeping and are the same thing. And then, of course, there's a whole bunch of people that are also joining because it's tradition in their families. There's a lot of people that discount that, but you won't believe how many military families there are where there's generations of people serving. All right. I know a friend of mine, he's 8th generation military, like literally 8, almost, I think it was like maybe 6 generations, actually, not 8. But it was a really far, far back number where this guy was. You guys remember Lieutenant Dan, like from Forrest Gump? It was like Lieutenant Dan. He literally, this guy's great grandfather or something was in West Point at one point.
Exactly what I thought about when he said this guy's 8 generations.
Yeah. So there's people out there that have generational ties to the military. Like same thing with the Marine Corps. Marine Corps, a lot of people, their parents were Marines. So they're like, no, one of the options that I have is I'm going to join the Marines too. And that gets built over time as a character building exercise, plus the benefits of it. But
Chris,
do
you think it's different now because there's so many other ways for people to make money now?
I think so. Yeah. I think there's that. I think it's a combination of things. And when you add them all up, the value proposition of being part of the military is not there. Recruiting is down to like all-time lows. And yeah, like just, I don't know. If you take a look back into history, in the 1970s is when they ended the draft. Right. So ever since then, we've had all volunteer force, which means that we went the market route that says we're not going to recruit based on the other thing is like generally this part is the one that actually really is really terrible. The eligibility of people that can serve the military is only like 1 in 5 people because of either weight and physical conditions of an obese population. That eliminates a lot of people. The other thing is not having a high school diploma. That is like, you'd be surprised. Like, what do you mean? Like people without high school diplomas? Yeah, there's a lot of people without high school diplomas. And then like basic IQ tests. Like there's a lot of people that can't pass a basic military IQ and mental fitness check. Like if you can't do that, then, so that leaves a significantly less population that's even eligible to join the military. So you're trying to recruit from a smaller and smaller pool. And one of the unfortunate things that I've seen over the last 10 years is that instead of trying to figure out how we can bring recruiting up, they've just been lowering the standards, right? Like, oh, we're just going to keep lowering the standards until we get more people to fit. And yeah, it's just, I don't know, man. I think, okay, so back to the Palantir point. I think if we are going to challenge Russia and China, we are not going to be able to do it in the traditional battlefield sense. Like if you think that we can throw bodies at China and Russia and win, we're not. We have to be highly, highly agile, highly sophisticated in how we maneuver around the battlefield and do a lot of strategic targeting. So if you look at the example of Ukraine versus Russia, the Russians have, I think, 3 to 4 times the amount of able-bodied soldiers that are able to invade Ukraine. But Ukraine is holding up. Why? It's because They have a logistics and intelligence infrastructure that's letting them take pinpoint shots at the Russians, where the Russians right now, even though they're a much larger organization with much more resources, you can do a lot of damage. It's the same thing if you look at the American Revolution, right? American Revolution, the Redcoats, we were strategic in the way that we fought against them. So the whole doctrine of everyone who has a bigger military is automatically going to win is completely out of the realm of possibilities. So right now, the military has to figure out, how do we coordinate ourselves so that the limited resources that we have in terms of manpower can be used in a maximum effect. And one of the ways that you do that is by having things like Palantir, where it gives you the most real-time, up-to-date information on the battlefield, so you can make decisions way faster than your enemies can. I mean, imagine right now you have a satellite in the air and you can see troop movements. You know where their troops are going to be even 10 minutes before they're about to be there. How highly advantageous that could be. You could launch an entire salvo of artillery in a location. By the time that they're literally standing on the ground, you could take out an entire division. So one guy pushing a button on a computer in the middle of Langley, Virginia, can take out an entire company of soldiers in Russia. Like, that is a huge game changer, right? So you don't need to have that giant army of people. Now, Palantir is a tool that can actually make that happen. So that's the thing that you should think about when you're thinking about Palantir, because that's what essentially it's letting people do. Like, multiply one person 5 times, and that is the efficiency that you'll get out of them. Without tools like Palantir, I'm not so sure the military can really compete against the Chinese and the Russians.
What do we think about what Karp said on CNBC specifically about Cramer and his references?
Because we didn't do Palantir Weekly last week. So basically, he said Jim Cramer doesn't know our financials, and
look, I think it's offensive that he says it's not a real company. I mean, it's 100% a real company.
Well, we know that, but I mean, I don't know why I think Cramer hates Karp, just like Chris hates Karp.
But he and look, Cramer flip-flops a lot, but he's flip-flopped on Palantir quite a bit. I mean, he's been bullish before on it, and now he's saying it's not a real company. A company did $1.9 billion in revenue. It's got $2.4 billion cash, 0 debt. It's 100% a real company.
What do you think about Karp saying, "Ask me about the stock price in 2 years"? Do you think
what else is he going to say? But the thing is, I believe him.
Yeah.
Or at least I tell myself I believe him.
I think. Do you really think that it's actually going to be that drastically different in 2 years?
I think we're in the infancy of AI, and I think AI is going to change a lot of things. And it's going to be not a lot of companies take a little. It's going to be the main companies.
Yeah, I mean, that was his core point. He literally outlined 0 to 1 and saying like there's going to be 5 to 10 companies that take the whole sector. And this is the other thing: ethics, tech, and then like control over the data. So governance. He said the company that solves those 3, in his words, makes a lot of money. I mean, either
they may be the one with the framework that is the governance behind it too.
Yeah, because that, as CodeStrap said, the models are a commodity. Everyone's training everything on the same data, or on the same types of models. The data differentiates, and so if you want to use Palantir's model or Snowflake's model, it doesn't really matter. It matters who's the enterprise going to give the data to, and that's where you either believe Karp or not when he says we are going to win in that conversation.
So I want to tie that back to what Shyam was bringing up when he was having that conversation. He was talking about, what he was talking about was blue team, red team, whatever. But what he really meant was, and then what I think, like, let's peel off like the generalities of it was, we're not going to go out, like what he's basically saying is we're not just going to come in, take over your data and just, do whatever we want with it. And what he was basically saying was, and this is what I've been alluding to with my company and what I think Karp and Shyam always talk about, is that collaboration effect of embedding and changing the IT department within the entirety of whether it is the DoD or any enterprise that he gets in touch with. It's a true collaboration effect of, we're going to be in this together. We're not just going to take over your data, run away with it back to Denver, or in the case of Google or Microsoft, run back and take it to Silicon Valley or wherever they're at. Well, I can't speak for those guys. What I can speak for is how important data privacy is, and working collectively with organizations is for Palantir. And I think what CARP is meaning a little bit is with the regulatory aspect of it and make sure that the right rules and guide rails are in place.
Do we believe CARP where he says he's going to get more business for Palantir because they have the advantage on the governance side?
Maybe not initially.
Because I think that's the $1 billion question, right? Like if it's him or Salesforce, and he can guarantee the client that Salesforce can't protect the data like they can. That was Chris's whole point when the AIP news broke. He was like, "This AIP is not special because other companies are doing it, right?" This chat-based interface for business intelligence. So the only thing that makes it special is the governance of the data. That is like the differentiator at the end of the day.
I would say at this point, Palantir, once again, I'm going to reiterate this because I think it's a valid point. They really need to split their commercial and their government business into two different things. There's two different multiples. There's two different sales strategies. There's two different client bases that you're going after. If
Can
they
you
had their
define two different things, please.
Okay, so how you sell to the government,
does not like
how you sell to the government is not how you sell to the regular commercial sector. Okay,
I agree with that, but let's be very specific. When you say two different things, you mean two separate companies?
Yes, two separate companies. Two separate companies. Even you could even split it up so that you have one holding company with two different divisions where each one is operating independently as an independent entity. Right now, everything is cajoled into this.
But then, But then wouldn't it just be two different types of sales teams? It wouldn't be two different types of actual software companies, right? Like just because, let's just take, for example, the majority of people that buy iPhones from the let's just say partly the United States government or other governments around the world. And then the retail-based, normal consumer. They're not going to separate, let's just say, their development divisions into government and commercial. They might change up their sales team.
Good point.
No, that's the point, that they actually should do that. They really should develop things independently of each other.
Chris, that makes no sense because a lot of those products with the government have so many implications for the enterprise.
Well, no. Even in terms of like leadership, its own operating infrastructure, their own leadership that is supposed to make some decisions on how things proceed. Right now, everything is under just one control. Like the best example that I can give you is something like Amazon, where Amazon Web Services is part of the consolidated. Yeah, I'll say it's part of it. It's part of the Amazon.
Wait, Steve, why? Why should he say it?
Because Amazon North America and Amazon International does not make freaking money.
No. Hold on. Amazon AWS. AWS is run as a separate entity, okay? Inside the Amazon ecosystem. If you look at, even though during earnings you consolidate the two, if you look at AWS, they have their own operating budget, they have their own profit margins, they have their own everything. That's side. They even have their own CEO. Andy Jassy, before he took over as CEO of Amazon, the main holding company, he was actually the CEO of Amazon Web Services. So I think.
But I feel like I see what you're saying, Chris. But to me, it's like at the end of the day, the underlying foundation is still going to be the software, and the software doesn't change. As much as you think it might. It is custom made and tailored to fit each individual customer, which is the benefit of Palantir versus say a Microsoft or maybe some of the Googles of the world, which are focusing on a suite of products, and then they say, "Here's our suite of products, buy them or you're done." It's like, I get what you're trying to say is like the tailoring of these software products are different for each individual client, but it's different when you have something like an AWS versus an e-commerce business, right? The focuses of the company are completely different. The vision of the company is completely different, right? Like AWS, it's like they have a vision of being able to provide the most relatable online sort of usage of cloud infrastructure, versus the e-commerce. Maybe you're still thinking about infrastructure, logistics, all that stuff, which to be very honest is kind of comparable if you think about it in a very supply chain minded way. But one of them is very physical. One of them is very digital, right? Very different in that respect. Maybe I'm thinking about it completely wrong. And I always enjoy your thoughts, Chris. So I'm not trying to downplay it. I just don't understand. You keep mentioning it month after month, and it's like,
it's okay to tell Chris this is a fucking stupid idea. You don't have to be humble about it. This is like There's no.
No, but
say
I always
fine.
value Chris's opinions and thoughts. I always listen to him because he's got.
So
good
do I. I
ones.
bought SLG, but he's wrong on this one. I don't think this one makes sense. I just don't get splitting that. First of all, it's not in their culture, right? I feel like it would cause turmoil inside of the company to do this as well. I don't think it would be anything that would be helpful.
If it was to advance the software, it could make sense, but it doesn't make sense to offload one side into a separate EIN number and a
Yeah.
separate company. That doesn't make sense. But strategically aligning so they can make further advancements, it would make sense. And the reason I say don't start going down that road with AWS is because a lot of people don't really read the 10Ks or the quarterlies or go over the numbers. And for the past, I think 4 or 5 quarters, international and North America for Amazon has not made money.
What do you mean by not made money? Meaning that it's net loss?
Operating income is negative. Now, maybe it becomes positive again in the next quarter or two because of all the layoffs and inflation going down. But AWS has contributed 100% of their profits.
Steve, is this why revenue has doubled since COVID, but the stock price is flat? Is this why for Amazon?
Could be part of it. You could make a case that Amazon got too frothy on the valuation, which I would say that it definitely did. I mean, you look at it, runs free cash flow negative, and people will say, well, because
but the
they
free
can turn the
cash
spigot off and they'll
that
be
free-
free cash flow positive.
that free cash flow number is very deceptive because they invested a ton of capex
Yes,
and
their
opex
capex
into increasing their business. Yeah.
and their capex is absolutely crazy. They spend more in capex in a year than Microsoft, Walmart, Target, Home Depot, FedEx, and I want to say Costco. In a year, they spend more capex than those 5 or 6 companies I just rattled off. I think their TTM is like 64 billion in capex.
Yeah, it's absurd.
freaking crazy.
Yeah, but
So it is a little bit skewed.
the reason for all that capex that they brought forward, because usually when companies do capex, they do measured amount of capex over a slow period of time. What they saw was a huge amount of demand because of COVID. So they overinvested in their logistics infrastructure and some of their other divisions, which actually brought their capex spending for the next 3-4 years forward, which means if you're a smart investor, which means that they'll spend less on capex going forward because they already have logistics already built out. So if I was to buy a company, Amazon is probably the one I'd want to buy because now the money that they were spending on capex is no longer going to be there, which means their free cash flow is going to grow considerably. If you look at 2019 and 2020, their free cash flow was $20-something billion a year. So if you think about the revenue that they have now and the amount of money that can take and turn into free cash flow and turn that into buybacks of shares at a depressed value, Amazon is actually the one you want to buy. Take a look at
Amazon looks very interesting right now, and I was thinking about buying more shares for the simple fact that all of the efficiencies that they are currently doing, the layoffs, inflation coming down, if you get oil under 70 a barrel, transportation costs on prime air and oil logistics will come down. They could get back to a very large amount of profitability. And as Chris said, CapEx will go down because they pulled it all forward. It's a really interesting setup for them, but things have to go right.
So I think
They probably will.
We're getting to the point now where, and I think Jeff did this intentionally when he left last year. We're getting to the point now where efficiency is more pertinent than continuous growth at all costs. You're getting to the point where it's like people are getting packages the same day that they order them, and people are getting one day delivery, and people are like, you can't, and which is absolutely TTD is absolutely phenomenal, right? When you think 20 years ago, before Amazon really started attacking the USPS, UPS, FedEx in terms of being like, we'll just create our own shipping network, right? Things were taking weeks, to get places, right?
So I'll tell you, I live in a building in New York. This is not an overstatement. This is not an exaggeration. I can comfortably say 65 to 70% of the packages are from Amazon downstairs. There is no question about it. I have pictures. I'm not going to share it because I can't blur out everybody's names and addresses, but I'll send it in a private chat. It's freaking crazy.
So that being said, at some point, just like Walmart, Amazon's going to go from a point where they're going to stop expanding entirely. Not entirely. I shouldn't say entirely. They're going to slow down like they kind of already have. They've realized that, they've accelerated all this CapEx. They've grown their warehouse footprint for the next several years. They can slowly start to inch out 1% to 2% profit margin off the e-commerce business. Now hold on, Chris, and I'll give it back because this is a really quick point. Their e-commerce business is going to be growing at $500 billion, or not growing, sorry, but sustaining $500 billion a year TTM, and already is at over $500 billion a year TTM. It's going to grow to 750 within the next couple of years. Imagine a 1, 2, or even 3% profit margin on that, which historically they've been like, whatever we need to get the customers happy and through the door and grow as fast as possible. Now they're going to say, let's turn on the tap a little bit. Couple that with AWS, couple that with Whole Foods, couple that with all these other opportunities. That's why I have to say, disclosure, like I'm long Amazon. It's probably it's the size of my Palantir position, if not larger. And, if it continues to dip, obviously it's up, 10, 15% over the past couple months. But if it dipped back below 100, I'd be buying for sure. I think in 10 years time, it's going to be something where you're like, and it's upsetting to me because I've always been, as a dividend investor, was always against Amazon because I'm like, why would you run a company the PE's $1 trillion, right? And now it's getting to the point where you're like, yeah, that was really short-sighted to me to be looking at the TTM and how quick they're not growing and stuff of the like. I really missed out on years of potential 100% growth within the portfolio, not the entire portfolio, but that position entirely. And it's something I regret, but you live and learn, and your portfolio matures, and you kind of understand where your dynamic fits. And unfortunately, that was just a lull period in my past.
I would. The best way to look at Amazon right now, you're getting a company at the valuation that it was in 2019 when they had half the revenue, without all the money that they've already spent on all the CapEx, which means the logistics infrastructure, that money's already done. That's already been paid for. That's existing infrastructure. So you're getting to buy a company at a huge discount to where it was in just think about it, 4 years ago. You could have bought Amazon and you would have been flat right now. And that's what you're getting at right now, even though they're a much, much stronger company with much higher revenues, right? And even from their business operating segments, they've shifted over from low margin to much higher businesses. So as an example, the third party selling network, where they charge to store your product, market your product, sell your product. They've grown their third party logistics like crazy. So that's number one, right? So fulfillment is a huge revenue driver for them, and it's not costing them nearly as much money going forward, right? 2, ad revenue. If you want to place your product at a higher level than the other ones, you're going to have to pay for that. What does that mean? That means that's once again a high margin revenue coming towards Amazon. At the current rate that it's growing, I think it's almost $12 billion a year TTM in just ad revenue. And that's growing at a 30-40% clip year over year. So that's another higher. At AWS, even though it's slowed down slightly, it's still one of the most profitable businesses that they have that's still growing. And on top of it, they have their own entire research division that's making AWS even more efficient via their own chips. Before, they were relying on other people for chips and infrastructure. Now they have their own infrastructure that they're developing for it. So Amazon, like I said, under Andy Jassy, a lot of people are not giving the guy enough credit. This guy, like I said, Andy Jassy is very soft-spoken, but dude knows what he's doing. And if there's one company that I would put my money on, I would say it's Amazon. And I'm sure that Code Strap could probably chime in on some stuff about Andy Jassy. The guy is not some pushover that doesn't know what he's doing. That's
no,
just
he's
like,
the one that plugged Bezos into AWS. It's his child.
He's a legend.
Legend, dude. Yeah, he's the way I would describe him. He is literally the Steve Jobs. I mean, not Steve Jobs. He's the Tim Cook version of Apple, right? Where you had the guy like Steve Jobs with the vision, but you had someone like Andy Jassy making sure everything in the background was being done to support the vision.
So he's not going to be a Ballmer, is he?
Fuck no. Even Ballmer, I think even Ballmer gets a lot of shit. You have to remember with Ballmer, he was in a position where Microsoft had just gotten into a point where they were investigated for being a monopoly. So he couldn't even invest the way that Microsoft wanted to. Okay. So I think a lot of people give Ballmer shit. Ballmer wasn't even that bad. And by the way, in terms of his personal fortune, Ballmer has probably made more money than anyone else. I don't know if you guys know like what Ballmer's net worth is right now.
Probably on the order
billion?
of, I'm going to say 30, 40 billion.
Let me see. Hold on one
I
second.
think it was 20. He bought the Clippers. We know that.
I mean, look at that margin.
90 billion. 90 billion.
90?
His net worth 90 billion. Yep.
Wow.
Good for him.
Steve, you could explain this slide, and then we'll be.
No, it's AWS segment results. Their margin is like, what was that? Freaking 25.5%, 26%. It's crazy.
Okay. All right, that's it for this week. We got to end it here. Yeah, not too much Palantir news this week. It was just the Shyam stuff and then the S&P stuff. That was the biggest stuff of the week.
Wait, one last thing. Snowflake just launched their own platform that has some similar overlap to that similar areas where what's his name where Palantir could have targeted. Let me just pull it up real quick.
It was especially in the supply chain space, right, Chris? That's where.
Yeah. Hold on, I found it. Let me just.
Okay.
Share. So this is the thing, man. Competitors are going to start coming your way.
Back. Let's talk about manufacturing here. There's still a lot of economic activity happening, but there's a need for efficiency. How is this offering going to drive that?
Yeah, there's really two major domains, if you will, that are the focus of the manufacturing cloud. One is supply chain management. I personally have a passion, around it, and the reason is supply chain management is sort of the only major realm in the enterprise that has never been platformed. It's still spreadsheets and email, how people run supply chains, and it is essentially a data problem. So we're incredibly well suited to make enormous headway there. The other domain is really what we refer to as IoT, which stands for Internet of Things, but it's really acquiring data from machines. And that data is then processed and used for predictive maintenance and service experience management. All kinds of optimizations are being used, and we've been on the factory floor. This is already quite common. This is a sort of a use case that's in wide use.
Well, communication between different pieces of the supply chain also an important piece here. At least that's what I was hearing earlier today from the CEO of Autodesk, Andrew Anagnost. Here's what he had to say about what manufacturers need from the cloud right now. Take a listen.
It can't just be China. They have to think about nearshoring. They have to think about distributed supply chains that come from the east, the west, from the south, potentially from the north. And they have to be able to dynamically shift between those as time goes on based on their demand and based on the capacity of their supply chain partners. The number one thing that gets in the way of people successfully managing multiple supply chains is the ability to communicate what you want from that supplier, what you want them to build, how you want them to build it, how it integrates with what you're trying to build as a system.
Frank, is this going to help with that communication?
Well, it's fundamentally a data problem. And in a supply chain, you have multiple partners, and the data is siloed, so people have real trouble, getting the oversight of what's going on. I mean, signals get generated, but they're not in your world; they're in somebody else's world. I mean, if you're making ice cream, I mean, there's four ingredients that make up vanilla ice cream. That come from different places and different people. And that is the simplest example I can come up with. When you go over to somebody like Honeywell, who has like 4 million SKUs, I mean, the equation obviously changes just dramatically in terms of the complexity of the problem and the challenges.
So, Frank, it's Morgan. At a time where you do have companies beginning to tighten their belts, given all the economic uncertainty, what is the pitch around this manufacturing data cloud? What does it do in terms of increasing productivity and lowering costs and making the process of actually producing a good faster?
Yeah, well, supply chain management it became incredibly pronounced during the pandemic. We were sending the wrong product to the wrong places every day, and we were upside down on everything. And you saw this from the large retailers and the large manufacturers. That's because we can no longer drive our operations through anecdotal observation. We really need to be predictive. We need to be data driven. All these kinds of things. So yes, you're going to become efficient. This is a very opportunity-rich environment to make improvement because the technology really exists now to get the overview, to be predictive, and to really manage operations with a high level of efficiency. This has been a problem people are trying to solve for the last 30 years and made very, very little headway on.
You're muted, Chris.
Yeah, I know a lot of the chat is like, oh my God, Snowflake, I don't want to hear it. No one uses them, blah, blah, blah. Don't let the Palantir bias become your only thesis without looking at the outside and saying, you know what other companies are entering this space, leaving the space, consolidating this space, and what kind of counterparties do they have? What kind of network do they have? Does Palantir have the capability to do everything? Yes, they actually have the best capability to do it. But are they selling their product in a way that it's becoming ubiquitous with the entire industries? That's something that's going to have to play out over the next 5-10 years. I think under the leadership of Frank Slootman, Snowflake is actually really good. Like, they know what they're doing. Everyone that I've spoken to seems to go the Snowflake route. The Palantir route is not there yet. Maybe that'll change. Maybe that's a dynamic that CodeStrap can get changed, where people are like, hey, I can just adopt Palantir Foundry and not get Snowflake and all this other stuff. But as of right now, Snowflake looks like they're going to be a very strong company going forward.
I mean
they are something that I've said time and time again. I kind of wish Slootman was at Palantir. Guy's a freaking operator. I'm very bullish on Snowflake, the company. I just don't really like the valuation right here. But they're going to be a phenomenal company. And I wish Buffett and freaking Benioff didn't invest in them, because then it wouldn't have popped so much in the beginning and I would have been a shareholder.
Can you put this comment up, Amit Halamont Madrid, whatever, 0709?
Which one?
The one that ends it. There you go. Chris, think logically, can Snowflake create a product that takes years and billions to create in little to no time? No. Anytime you have thinking like that, where there's no other competitor, no one else can do this except Palantir, that's when you know that a competitor is going to come up and create something better. If this is the mentality that the individual investor has, that's fine. But I hope that Karp is not sitting on his ass thinking that, hey, we have the greatest thing and no one's ever going to challenge it, because there are going to be competitors that come out the woodwork. And you better have a product that's really good, and you better have a strategy around how you're going to sell that product that everyone's going to get behind.
Because do some research into Frank Slootman. You don't want to bet against this guy.
Yeah, this is not his first rodeo. He's run 3 very successful companies back to back. He knows what he's doing, and his entire executive team is a bunch of goddamn killers that he brought over from ServiceNow and from Data Domain when he was there. So just don't underestimate the competition.
So before we go, I have a question, and this could be a completely separate episode. I want somebody to explain this new valuation on Tesla to me, please.
That's a separate.
Because I did a little bit of research today, and what I'm seeing is the estimated global taxi realm is worth $100 billion.
Or you're talking about Kathy's valuation?
Well, she came down a little bit with her new valuation. I think the last one, the bear case, was like 2,500.
But that was pre-split, wasn't it?
No.
Oh.
I don't think so.
Look, if robo taxis become the future, 2027, we have a 10x on Tesla. So that's it.
I mean, what I don't understand is Uber's like 34 billion, Lyft is 4 billion. The rest of the taxi cab industry makes up the rest of the 100 billion, and the entire auto industry, including Tesla today, is $2 trillion, roughly. How do we get Tesla at a 5 trillion market cap? I just don't understand. Somebody needs to break down some logical math for me, because I'm a freaking idiot. I don't know.
It's Kathy. She figured it out. The open source.
Apple made $100 billion, and the highest market cap it ever got was just over 3 trillion.
I don't know what to tell you. All I know is Kathy either she's right or she's wrong. We'll see.
And I'm not saying it's not going to go up. I just don't understand the valuation that they're trying to get at.
I think she thinks that there's multiple avenues for positive growth that are outside of just the auto segment. Even though the auto segment has a huge TAM, Tesla is developing in other things that are going outside. To me, this robo-taxi shit is cockamamie bullshit, in my opinion. Like, the minute that you're able to have everyone turn their cars into robo-taxis and all this other shit.
New York City 2040, come on. It's not happening in the next 5 to 10 years in New York City.
Yeah, I'm not gonna speculate on it too much. Like the minute she said, "Oh, we think the biggest opportunity is robo taxis," I was like, "This lady's lost her mind." Like, that's just dumb. Like, and that's not anywhere near a possibility as of right now. Maybe in the future, when the regulations come around, it maybe. But I think there's better value prospects for Tesla in their energy business, in their charging network business. Those are the things. If she said that, hey, we see Tesla growing into this giant energy infrastructure play, I could get behind that. I could get behind that 100%. But her bullish argument that everyone is one day going to turn their cars into taxis and just let them roam around the city. Okay, that means that I can buy a fleet of Teslas and just outcompete the shit out of everyone else and lower my costs down to like a nothing amount of money. Right? It's stupid. This robo-taxi thing, I still don't get how the possibility is going to happen. But then again, maybe I'm not seeing what she's seeing in terms of vision.
I'm with you. I'm not seeing it right now or anytime soon because government moves at a very slow snail pace. I don't see the regulation going through. I don't see them flushing everything out. And it's just one of those things where, is it going to happen? Yeah, I can see it happening. But not in the next 5 to 10 years. I don't have a crystal ball, but I think it's not really. I wouldn't place my money on betting it's going to come to fruition sooner than later.
Yeah. Yep.
All right. That's it for us this week. Thank you all for joining. Steve, thank you for blessing us with your presence.
Dude, I'm getting a little bit nervous because me and Bergman have this bet about Palantir versus Snowflake, and for like the last year, I was winning like crazy. I was like, "Yeah, fuck it, man, we're like ahead 20%." Lately, in the last couple of weeks, Palantir and Snowflake have been like,
when does the bet end?
Racing.
When does the bet end?
December 31st, 2023. Ooh. So it's a starting point of August 17th. So it's whatever the stock price was at August 17th. The percentage changes in between the two. So Snowflake has always been at a much higher return than Palantir, but they took their licks lately. I'm hoping that Carp dumps another few million shares on the market soon and, puts me back in the lead again. But it's almost like every other day we're like just changing off the leads. Like, oh, Palantir's a little lead. Yeah. So
we'll see. Hopefully he buys shares, man. That would be nice. But
it'll be. See, that's the other thing I don't get. For all this bullshit about we're an undervalued company, your executives and you are selling off shares right and left. Buy some fucking shares. You got 1.4 billion in the bank from all the shit you already sold off. So buy some shares, Carp. Support your shareholders.
He's got to make more barns in Connecticut, man.
That's true.
Yeah,
New Hampshire. Yeah.
I mean, what is he doing? What is he fucking doing? Just stockpiling cash for the Jesus' second coming or something? Come on, man.
Gold, Chris.
Carp is a very confusing guy, bro. He has no wife. We don't know what motivates him personally in terms of money, right? So I don't know what he's like. Why wouldn't he just buy a ton of Palantir? Like, what does he need the money for? He doesn't even have a big house like Peter Thiel. He has a fucking barn. So
we all don't have that Chris money,
Chris, I got something else for you to look at.
Sure.
Always. All right, guys, we're out. Yep. See you next week. Good night.
Later.